what's up? When we're talking with sellers, we often get questions around taxes. Now, I am not I'm not a CPA, I'm not an accountant. You need to make sure that you ask your tax professional for tax advice. But in general, this is what I have been told by my accountants and my tax advisors in different deals that we've engaged with. Keep in mind, I'm in Texas, and so we'll dive into some details here on some common questions we get. One, if I am an investor and I'm selling you the house, seller finance, does it change my taxes, right? And probably not a whole lot in terms of capital gains taxes, because maybe you'll get your payments over time versus all in one sum. It could depend a little bit on the time that you've owned the property, and I recommend highly that you reach out to your tax advisor to see how it will impact you in detail. If you are a seller and it's your primary residence, you've probably heard of the tax benefit you get from selling your primary residence, as you can defer, actually not pay at all, any taxes on the first $250,000 if you're single, and $500,000 in profits that you make if you're married filed jointly. So that's a huge tax break. And do you lose that tax break when you're selling seller finance? Because now, instead of getting all that money all at once, you're breaking that payment down over 5, maybe 10 years, who knows how long. So does all of that profit now become taxable? That would really suck, and that would kill a deal, right? Because that's a lot of money to have to pay the IRS in terms of profits there. Well, the good news is, no, that's not how that works. You can have it set as an installment sale, and the way that that's looking at it here is that when you sell that property, essentially the profit in the principal on that sale price is considered, now a part of the loan. So you're not paying tax on it because it's your primary residence, and now it's a loan quantity, but you do pay taxes on the interest payments made. But that's in addition to what you're already selling for anyways. That's extra money you take home, and you're only paying Uncle Sam his sliver of that interest payment, not the whole interest payment itself. So that's the good deal in terms of how that's looked at. If you are a buyer, in terms of taxes, there's not much different in a seller finance transaction versus just using any old other lender, especially for an investment property. So we're going to talk primarily assuming that you're buying this house as an investment property. One, you're going to need to ask the seller to fill out the form 1098. This is what any mortgage company would give you at the end of the year. This basically documents that you've been paying them, how much is interest payments, and all those kinds of details there are important for you filing your taxes. And of course, if it's an investment property, you have all your standard deductions on these things, your expenses like property management, repairs, you got your interest payments, your capital gains are only paid when you sell, and of course it's paid less in capital gains tax if you hold on to it for at least a year versus your ordinary income. So always recommend holding on to it for a while. And then of course you have depreciation of the property, which takes your property value minus your land costs on that value and break that number down over 27.5 years. Excellent tax break for real estate investors as well. Again, those are not different because it's seller finance. It's just the standard way that you approach taxes for any investment property that's a rental property. Hope this video helps answer a few questions on taxes. If you do have any questions that you need help with, give us a shout. I'll put you in touch with our tax guys as well, and they can answer any kind of deep level, detailed question that you might have. Reach out to us on our website or give us a call.